Welcome back to Wall Street Confidential. We've heard bad news out of Ford GM for quite some time now, but Jim, after you listened to the CarMax call recently, you seem to think that these companies have fallen so hard that they're not going to get back up.
No. The CarMax call is really incredible because CarMax talks about a dramatic decline on a month-to-month basis for SUV values and for sales in SUVs and used SUVs, and for pickup values and sales for pickup values and for used pickups. And this is the group that right is in the crosshairs of the American consumer because it's so obvious to see the trade-off. Above between 330 and 350, it makes tremendous sense to go to a car or a truck that can get you, and there are very few trucks, 30 miles to the gallon. It's just demonstrable. Americans aren't stupid. They recognize that, listen, if you can buy a car for $15,000 more than another car that gives you a dramatically improved gas mileage, I mean, you're actually going to have to think about it. And if it's only $3,000 to $5,000, you'll just do it automatically. So the inventory of used cars, used SUVs and trucks is just ballooning. And the car lots have way too many. And GM and Ford, which have focused on almost exclusively to date on bringing the cost down of their cars and trucks, has not had the foresight to say, look, oil's going to go higher, make no Hummers, make no SUVs, make no trucks. That's their bread and butter. That's where their profit is. They don't make that much money on small cars. So GM and Ford, once again, got the market wrong. Chrysler did too, by the way. And I don't know how Chrysler can that Nardelli can continue to come out and say things are good, but he's private, so you can pretty much say whatever you want when you're private. But I would emphasize that the costs coming down is is important. But what's more important is having the right inventory to sell, and neither Ford nor GM has it. So I begin to look at their capital structures, and you see GM at a multi-year low, and you recognize that their capital structures cannot currently afford that decline in sales. So, I mean, if I were GM, they're not going to do this, but if I were GM, I would work very hard to come up with a restructuring package that would require them to issue hundreds of millions of shares, pay down a lot of debt, and get through this period because they're going to lose fortunes. And neither stock is investable, GM or Ford. Maybe some of their senior debt is, but this is just a terrible time for these companies. And you have to view them as airline companies. They're that bad.
With GM and Ford recently saying they're going to export more cars to China, do you think that international growth will help them?
I wish it could. I wish it could, but the domestic growth is so bad. Domestic sell-off is so bad that all of these things that they're doing is right. Becoming more international, lowering the price of their cost per car. These are all right. But in the end, what they focused on were SUVs and pickup trucks, and they are probably reeling from that. You see that GM made some news today about suspending some of these models. I just think the American consumer can't afford GM and Ford's cars.
Should we be selling Ford?
Yes, still right here.
Okay, thanks, Jim. Stay tuned for more Wall Street Confidential on TheStreet.com TV.